All right. Hey, everybody. I'm Peter Catalano, Catalano Financial, and we've stumbled upon this really wonderful opportunity to share valuable information with various professionals. As a financial advisor, I'm really a team leader, is how I look at myself. I'm really good 50,000 feet up. I can see everybody on the team, and I know who needs to talk to who and when they need to talk and what they need to do. That's my role. And certainly, one of the most important factors that comes into play in any planning scenario is taxes. And, tax professionals well, there's a lot of them out there. Some of them are tax people. I don't know how much I call them professionals, but I have the privilege of working with professionals. And one of them has joined me here today, Lloyd Conley. Lloyd, thank you for being with me here today.
Thank you, Peter. It's a pleasure to be here.
I'm glad you're here. And, Lloyd, what we're going to talk briefly about, and we're going to keep this at a 15-minute window here, is we're just going to talk about some overview of some tax items or tax things that you think the consumer or business owner needs to address. But before we get into some specifics, Lloyd, can you give us just a real condensed, who are you and what's an EA and why are you a professional? So have at it.
Well, I'm a senior tax architect when it comes to the tax business. I have an MBA in quantitative analysis and finance. I'm an enrolled agent. Enrolled agents are the tax professionals that are licensed by the Internal Revenue Service. And part of what that means is we can represent taxpayers, business and individual, before the Internal Revenue Service when the taxpayer has issues with the IRS, when the IRS is coming after them, which they are with a vengeance right now, as a matter of fact.
When the taxpayer has issues.
Right.
Yes, I have a therapist who has issues.
Yeah.
The people. So let's talk about that. I know you've brought that up to me before, and I think it's apropos right now. So government spent a lot of money over the last year or so, and I think they want it back, right? And I'm being a little sarcastic here, but I've heard not only from you, but I've heard that the IRS is ramping up a lot of, they call them revenue agents, and they're starting to come after people. So what's going on here, Lloyd?
Well, there's a couple of things going on, Peter. You mentioned the spending that's gone on in the last few years, trillions of dollars of new expenditures. Congress now has $4.5 trillion in new spending bills that they're looking at, including a transformation of the tax code that takes us from the deductions or the reductions that we enjoyed in 2017 back to where we were and maybe beyond or worse in terms of tax liability for the taxpayers. So we've got all these expenditures that have occurred. When COVID-19 hit in 2020, the government, including the IRS, shut down. And they did a moratorium on audits and collections, et cetera. Well, that moratorium is over now. As of June the 15th, the IRS is back with a vengeance, and they're looking to catch up on lost time and taxpayers that have gotten way behind. There's $1 trillion in balance due taxes that the American taxpayers as a whole owe, and the IRS is coming after that. So all their favorite campaigns that were put on hold for a year and a half are unfolding. In September, they began sending out levy letters. So a lot of taxpayers are getting lots of bad news from the Internal Revenue Service, and the IRS. A levy, by the way, from the IRS is saying we're coming after your assets. So the IRS is ramping up. They're getting real serious. On top of that, the Biden administration and the Democratic Congress are moving to control our finances more and more. And one of the key elements of that is this new proposal to give the IRS the responsibility of auditing taxpayer bank accounts that have $600 or more in their bank accounts.
Now, Lloyd, let me stop you there. So what I've been reading is that and the banks, especially the smaller banks, have been pretty upset about this, that it's a bank reporting requirement for any deposits over 600 versus balance over 600. And to me, there's a definite distinction there, but maybe there isn't. So is
Yeah, I
it
think
the deposit? Because it used to be, anything over 10 grand, they'd have to report under the SAR, I believe, report, let the IRS know that somebody deposited 10 grand. Now it's 600.
yeah, you're right. So what they're looking for is tax liability or income revenue that people are not reporting. That's what they're looking for.
So
To make that happen, though, as a practical matter, the Internal Revenue Service is going to have to add thousands of employees, and that's the Biden administration's plan. Now, how well or how soon or to what extent this is affected is an unknown. In the meantime, the Internal Revenue Service, in part because of some of the things that happened with COVID, but in part because of the budgets they've been operating under in recent years, the Internal Revenue Service is way undermanned. So that's one of the short-term good elements of all this. Nevertheless, they're coming after us, and really the IRS's focus as of right now, the IRS's focus is on the big dollar. And when I say big dollar, I'm not talking about just millions, but when they think about big dollar, if a taxpayer owes $10,000 or more, that's significant enough for them to.
Also, 10 grand is a big dollar. 10 grand of money owed is big dollar to them. That's interesting. Right. In society, we think big dollars and millions and all these people escaping taxes, but it's interesting that they're bringing this down to a $600 level, and we know anything over 10 grand catches their eye. And it's fascinating to me. The purpose of this call is not to go into some of the politics behind that, but it just fascinates me. Who are they going after? But so I get it. And real quick, you're now entering into the role of helping people who are getting these love notes from the IRS. Is that where you're focused now?
Yeah, that's a change in focus. I've been helping my clients with this ever since I've been an enrolled agent, which was 2013. But this is a new focus in terms of the level of activity or how I'm approaching the marketplace, because of this this new level of intensity from the Internal Revenue Service with respect to collections. There's a lot of people out there that are going to be and are needing help. And really part of who I am is helping people. I'm really passionate about helping people, especially whether it's from a planning perspective or a problem resolution perspective, helping people kind of get the IRS off their back, or bottom line, pay less taxes, fewer benefits.
And I believe your skill set in helping people, I like what you say there, but really you've got years of experience in dealing with the IRS directly. And as an enrolled agent, I think that's special to understand that you are licensed to what's the wording? Be in front of the IRS on behalf of represent a client. And that's a big deal. I mean, what's the lovely joke they say? The attorney who hires himself has a for a client, and
you took the words right out of my mouth.
Yeah.
So most people would not go to court without an attorney. Right.
But they're going for the IRS.
But people, they'll call up the IRS and try to fix their problems. And that's the worst thing that anyone can do.
Yeah.
Because the average taxpayer doesn't understand the legal language and agenda of the Internal Revenue Service, and they can just put their financial foot in their mouth if they're not careful. So really, people should always have a professional representative speak to and deal with the IRS on their behalf, whether it's an audit, whether it's about a collection letter, whether it's about a lien or a levy or what have you. And especially if they're,
I get it. Don't mean to interrupt, but I want to make sure we get as much as we can out for this time that we have here today. So I want to shift gears real quick and briefly talk about, we have about 3 or 4 minutes on this. Lloyd, is there anything somebody could do between now and the end of the year to help their tax situation? Maybe they've realized a whole bunch of gains in their portfolio, or we've talked about qualified plans and stuff like that. But what would you say to somebody who says, hey, I want to do a year-end tax planning, which is something that I like to look at, but really, is it a year-end tax planning? Is it an all-year planning? Because you educated me on that as well.
Sure.
Help me out. When's the best time to do the tax planning, and what can we do between now and the end of the year? 2 questions there.
Okay. Well, when it comes to tax planning, I guess my watchword would be never, never, never delay. Start tax planning as soon as possible. If you haven't already started, start now. And what I would do personally in helping someone is do a tax diagnostic review. In other words, I look at their entire situation and identify what kind of issues they have that they're vulnerable with, and that we could make some changes or take some actions on before the end of the year. And I know you're asking in part for high level, kind of summary things, but the reality is most people's tax situation is far more complex than they know, especially private business owners. And so the one-off kind of recommendations are probably not so valuable. So it would be a good idea to have a professional take a look at your situation, the whole situation, and do what you can do for the end of the year. Really. And for example, I have a meeting with one of my tax planning meeting with one of my clients, big clients this week. And what I'm going to tell this client again is that now's the time to be doing your tax planning for 2020. And that's what we're going to do. We're going to look at some stopgap measures, minor things that they might be able to do to help themselves a little bit. But really, the structures that can be or should be changed to reduce taxes have certain deadlines during the year, and we're past a lot of those deadlines. So having said that, just a couple of year-end planning items that are really common. One is a business owner should look at expenses. Do they have expenses, things that they need for their business in January, February that they can pay for in December or November and reduce their net income that way. And in terms of investors, that's kind of a hard choice there, I think, because we're nearing the lows. I believe we're nearing the lows of the market for this year. And I believe we'll be taking off before the end of the year. And so selling now might not be the best idea for investors unless they've got losses that they want to clean their portfolio of. That might be something of a benefit. But I generally really feel strong about getting your tax planning done as early as possible. Now's the ideal time for 2022. And if there's any stopgap measures that can be taken to improve things at the last minute, that would be a function of an individual situation.
I got it. I appreciate that. So in the sake of time, I'm going to wrap this segment up and just say, if somebody wants to get a hold of you, Lloyd, how do they get a hold of you? What phone number, what email, website? How do they reach you?
936-499-8146 is my telephone number. Website would be www.tax-resolution-now.com.
Got it.
And all the contact information would be there.
All right. So folks, if you want to get a hold of Lloyd, call him directly. Folks, Lloyd's not the first one who's come to me saying the IRS is ramping up. So if you get one of those love letters in the mail, please don't have the tool of an attorney and represent yourself. Give somebody a call. Of course, Lloyd's a great one to call with his time and experience, and roll from there. So Lloyd, thank you.